Hello traders and welcome to the London Forex Broadsheet's weekend wrap of the markets. The euro declined 0.66% on Friday as oil prices retreated. Eurostat reported that European industrial orders declined 7.4% in June. This is the most in more than 6 years, led by a 29.8% drop in the volatile transportation sector. Last week was the first time in a month that the euro had been able to hold in the green, after falling 1,200 pips in the last 6 weeks. A major price area at 1.4950 was broken this week, and that now creates a test of old resistance that now becomes support. On the long side of things, the market has already shown that it is willing to buy back the euro that does look to have gone on sale. The pair has absorbed a great deal of Eurozone economic negativity recently, and has consolidated well at the 1.4800 area. The cable declined 1.3% after the Office for National Statistics said that in volume terms, Q2 GDP stagnated compared to the previous quarter. Minutes of the Monetary Policy Committee's last meeting indicated rates could stay on hold even as the economy slows, because the bank projected that inflation could return to a target within 2 years if rates remained unchanged. The pound has dropped against all the major currencies, and continued to do so in spite of the fact that the Bank of England looks unlikely to move on interest rates anytime soon. The chart reveals the pair trading below the 62% Fibonacci retracement area formed on the low of January 2006 to the high of 2007. The Aussie declined for the first time this week after gold and other commodities fell. Commodities are still expected to decline going forward, since it is likely to see growth decelerations in the US, UK, Euro area, and Japan over the next several quarters. When combined, those economies make up about half of the total global output each year. The Aussie has responded to a huge amount of economic data over the last month, and now may have the chance to move on momentum and sentiment. The weekly chart has formed a reversal pattern that has revealed the fact that 8600 houses a lot of buyers in the pair. It has been an important price point previously and is obviously still very important right now. The loonie rose for the first time in 4 days as the US dollar rallied when crude oil, gold, silver, copper, and platinum declined. The loonie has risen 1.3% since August 15th and will advance for a second week. The pair that has shown the most resolve to hold the dollar lower in trade, and in reality when we look at the weekly chart setup we can see that the recent pair strength was a little more than a small bounce higher in what was a dramatic short trend. There was a failed trendline test dating back to 2004 and it failed to break higher. The Swissy rose, making back nearly all of the decline from Thursday as traders dipped into equities. The next area of resistance for the pair looks to lie at 1.1040, the high made during last Wednesday's trading session. Traders may also be looking for a break of 1292 on the S&P 500 as confirmation of a move to the upside. The weekly chart shows a 50% reversal in the gains made in the last year. The Fibonacci areas have been well respected in that trading time. The pair found the strength to break above the trend line that held as resistance for more than a year. And that is something very important to know because breaks of such large price points that are as blatantly obvious as that rarely move higher without some kind of reversal test. The yen rose as US equities found favor with investors on Friday. The market may have been somewhat soothed after Federal Reserve Chairman Ben Bernanke said in a speech on Friday that officials still believe inflation will moderate, an indication to many that the Fed intends to remain on hold at least through the end of the year. The long counter trend line has held up well in trade since the middle of March and does look capable of sending the pair on a test of 114. The moves have been made in spite of very erratic equity trade, and in the face of some very negative economic data coming from both sides of the pair. On the upcoming economic calendar we have no releases scheduled for Sunday, and on Monday we have existing home sales at 10 a.m. from the US. In Asian equities, the Nikkei declined 86 points or 0.68% to close at 12,666. The Australian S&P ASX advanced 56 points or 1.15% to close at 4931. In European stocks, the German DAX rose 105 points or 1.69% to close at 6342. And the UK FTSE gained 135 points or 2.52% to close at 5505. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 11,627 after gaining 196 points or 1.72%. The S&P closed at 1292, up 14 points or 1.13%, while the Nasdaq finished trading at 2414 with a gain of 34 points or 1.44%. Crude oil for October delivery fell $6.42 or 5.3% to settle at $114.59 a barrel. Gold for August delivery fell $8 or 0.96% to $825 an ounce. In Treasuries, the yield on 10-year notes rose 4.3 basis points to 3.87%. The yield on 2-year notes rose 9.6 basis points to 2.4%. Overall, the dollar made back most of its losses from Thursday as oil declined more than $3 a barrel after BP restored shipments on a Caspian Sea pipeline through Turkey, easing concerns about supply. There was no economic data released in the U.S. on Friday, but statistics regarding existing home sales for July will be released on August 25th.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.